Welcome to Let's Talk Finances. I'm Jeremy. Today we have a guest. His name is Andre Morales. He is a good friend of mine whom I met back in church about 3-4 years ago, right before we got married. And he is a mortgage loan officer with Colonial Mortgage, and we both have a passion for educating people about finances. So it just made sense that we connected and that we shared his story with you. In our conversation, we talked about his industry, his finances, his parents, COVID, and then the housing market, buying and selling. Like, how's it looking right now? Take a note that this conversation was recorded at the end of 2020, middle of December, so we make references to January. You're seeing this in January, so that is why. Just wanted to make note of that. With no further ado, let me introduce you to Andre Morales. What's up, Andre? Thank you so much for being here with us. How's everything with you?
I'm good, man. Thank you for having me. It's always a pleasure being with you and doing these things to educate people.
We've got 2020. It's been quite a year. But before we go all over that, can you just kind of tell me about like your background a little bit so the audience get to know you a little bit better?
Yeah, sure. So first of all, my name is Andre Morales. I am a mortgage loan officer for Colonial Mortgage. I've been doing this for about 6 years now. I have my degree in finance, so I'm pretty well versed in all these numbers. So I'm just in the business to help people out, whether it be mortgage, trying to work on getting licenses to do personal finances and stuff like that, investments. So that's just pretty much where I'm standing right now.
You mentioned personal finance. Are you securities licensed by any chance?
Yeah, well, I am getting. I'm scheduled to take it in January.
Oh, same
So
here. Same here. Which
yeah,
one are you taking?
65.
65. Awesome. Cool.
Yeah.
Well, hey, that's awesome. And can you tell me a bit about your dad? I know he started the company, right?
Yeah, so my dad has started Colonial back in the early 90s.
Okay.
And then it's just in the mortgage and real estate industry, you kind of jump around a little bit. And so he's been with Colonial, he's had that name for years, built a little foundation, built relationships along the way. And now we're just me getting into the business with him, kind of, solidified that foundation for us. So we're slowly growing upwards rather than, you know, to the side.
How was it growing up with a dad that's an entrepreneur?
Um, so it's very like I saw the ups and downs of this business. Mortgage and real estate there has a lot of ups and downs.
Right.
You don't have a guaranteed paycheck. So
That's
you
true.
you definitely see the good times and you definitely remember the bad times. So just seeing that made me want to keep on trying to be better than my dad. I'm very competitive, whether it be sports or careers. I just want to be very good at what I do.
That's awesome. It's kind of cool to have that in the family. And well, I mean, I guess is that what inspired you to kind of jump in this industry and to become an entrepreneur yourself?
Yeah, I mean, so my dad has been doing this since before I was born. So I kind of knew the terminology before getting into it.
Okay.
And I think what actually influenced me to become an entrepreneur is my schooling. So at school, I was wanting to be like in the engineering field. Didn't really work out for me. So I moved over to business, and then I focused on finance, and I really enjoyed numbers. And I enjoy helping people out. So being an entrepreneur in the financial industry or the financial category um, felt like I needed to be in there. I loved every part of it. And in the mortgage industry, I think my dad kind of dragged me into it. But I'm grateful that he did because I enjoy it. Having helping people out to buy a home is just it feels great doing that.
I'm sure. I'm sure. Um, Now, how long have you been married now?
We've been married for about 2.5 years.
2.5 years. Well, congrats. That's awesome.
Thank you.
I wanted to ask you, how are your personal finances affecting your business, and whether it's positive or negative?
Yeah, so like I've mentioned before, this business has its ups and downs, so definitely it feels great when you're at that peak. But when things are getting a little slow, it gets a little difficult, you know. Luckily, before we got married, we had low expenses and we were saving up to pay for college, for our wedding, the house, everything like that. And then we got married. We added another income, my wife's income, but we also added more expenses. So just kind of always refreshing your game plan, your financial plan is always a good idea because you never know what expenses are going to come up, whether it be just like a random expense or unexpected expense or things that are planned out. So
Or
I
like
think
something like COVID that just takes out the country, the
yeah,
economy.
yeah, that too is very, very unpredictable. The
Right.
economy, one thing that COVID has taught me about the economy was that it's very unpredictable. You can plan for things that, investments or whatever you want to do in the future, but COVID hit and it's gone now. You have to backtrack and see what needs to be done. Do you need to tap into your savings or do you need to sell some things or whatever? Um, it's very difficult to try to predict what's going to be coming in the future.
I mean, this hasn't happened for 100 years, and back then they didn't have the technology that we had. Um, but it's been quite interesting to see how other countries have kind of reacted to this, and wow, I mean, it breaks my heart to drive around and see businesses closing.
Yeah,
Because small businesses are everything in this economy, and especially in the United States, we're root for the little guy to kind of win.
right.
So it definitely opened my eyes a lot about what can happen, and how you just don't know how to prepare for these kind of things. So you're absolutely right. I agree with you. You can plan for the best case scenario and hope for the best to come out, but there's things that are just going to be thrown at you, and you just gotta have to make small adjustment, kind of like you said. So I totally can relate. um, and I guess it's 2020 is teaching us how to be flexible, right, and to be adaptive.
Mhm.
So how, I guess my question would be, how have you adapted? What small changes have you made to make 2020 more bearable, I guess?
Um, well, luckily, in the mortgage industry, the interest rates are very low. They're
Right.
extremely low right now, that at all-time lows. So that really helped out the refinance part of my business, and
Oh yeah.
it's helped me maintain that income that we needed. Um, and with that, it helped me, increase the savings fund or emergency funds that we always need. And that's another thing that I learned too from this industry, that you need to always have an emergency fund
Right.
or something to fall back on because you never know when that next paycheck is coming. You never know if another pandemic is coming or, a recession, depression, whatever. Always be prepared for. I used to prepare for the best, but now I like to prepare for the worst. And I'm better off that way. It feels so much better when you can rely on a savings account to get you through the next few months. So that's always good.
What's your take? Because I know the industry standard is, save 3 to 6 months worth of income. After this pandemic, has your mindset shifted about that? Do you think it should be higher?
Um, I mean, the more months you have in reserves, the better, you know. But I think a minimum would be 3 months. Minimum 3 months reserves is good because that gives you some time to, you know, look for a new job or look for another stream of income or something like that. Or maybe if it has to come down to moving back with parents or family members or something to, you know, cut your expenses. I mean, we're all going through it. You know,
Hmm.
everybody's story is different, but we're all going through the same pandemic.
Yeah.
So, whatever you can do to cut down expenses or increase your income, go for it.
I've read and I've heard, but I'm not sure how reliable those sources are. But that this past year, a lot of big investors have been really taking advantage of the low interest rates and buying a lot of homes, leaving the average Joe kind of behind because they're being outbidded by these investors. Have you seen a lot of that happening?
It's definitely competitive right now. You know, I have a couple clients that they have been looking for a house for like 4 months now, and they haven't been able to get an offer accepted because there's just so many people either putting like 20% down or 10% down, and you know they are able to increase the price of their offer because rates are low, meaning that home buying is more affordable.
Right.
So that's why they have a little bit more space to, you know, offer 20, $30,000 above asking price. So
Wow.
I see a lot of that, and you know, it's actually more of an incentive for people not to buy cash because you know they rather have a low interest rate and keep some money for reserves or
Right.
stuff like that. So it's very competitive right now.
Wow. So what do you recommend for people who are looking to buy right now, aside from, not necessarily paying cash?
Um, I mean, right now, I recommend first that the sellers and the listing agents be educated on the different programs. You know,
Yeah.
because I like to do FHA programs for my clients
Hmm.
that are first time home buyers because it's a little bit more flexible. But when a seller or a listing agent sees an offer coming in as FHA, they kind of back away from it and want to go conventional. Um,
Ah,
so that's what I'm trying to do, educate people, putting out videos and stuff like that, so people know that FHA is not the worst loan out there. It's actually it's a pretty good loan to have. Um,
can you go a little bit into it right now?
sure.
In a nutshell, like what does it do? Why is it advantageous for a buyer?
Yeah, sure. So FHA it's a government loan, right? So it's insured by the government. There's mortgage insurance on it, um, which allows you to have a lower down payment, a lower credit score, and use more of your income to be able to qualify. Meaning, like you can have a little bit more debt on your credit report, and you'll still be okay. So it's flexible, but when people see that you're only putting 3.5% down on the house, they kind of tend to stray away and go to the 5%, 10%, 20% down payment programs, which are usually conventional.
Got it. And so, how can we convince sellers to be more open to that?
Well, I've been actually calling them whenever my agents submit an offer for our clients. I've been calling the listing agents, sometimes the sellers to tell them, hey, my clients are well qualified. They will be able to pay this money back. They're putting a minimum down payment, but it's a good loan. They have good credit score, this, and that. And usually, you know, people go FHA because they have a low down payment. You know, they don't have
Right.
much in their savings that they can save money with the down payment by just going FHA.
And how are the interests for those loans? Are they the same that everyone else is getting, or?
Yeah, so FHA is the interest rates are actually lower than conventionals.
Really? Wow.
Yeah, they're a little bit lower than conventional interest rates because there's a mortgage insurance on there.
So they
You know,
pay
so-
they pay that monthly into the payment.
right?
Got it.
Yeah, so the interest rates are lower, and for conventional, it's more FICO driven. You know,
Okay.
meaning like the higher the credit score, the lower the
The lower
interest
it
rate,
is. Yeah.
right? And it depends on other factors, but FICO, or credit score is a huge factor that's being considered in a conventional loan.
I know you talked a little bit about this already, but what are some things that you learned financially from your parents?
For my parents, so my parents, they never had a degree, let alone a finance degree. So what I learned from them would be like their experiences, more so their bad experiences. Um, because they couldn't really teach me about stocks or bonds or different investments, but they could teach me about real estate and mortgage. They've been in that industry for years. So growing up, again, I witnessed the ups and downs of this business, and I'd like to think that I learned from all of that. I went through it myself. All the ups and downs, and it's just about learning. Learning from your past, learning from your experiences, your mistakes, and just making those adjustments and adapt to everything that you've went through to become more better, more successful.
I gotta ask it. 2008, how was that for them?
Yeah. So in 2008, I was 14, 13. And I didn't really understand it too much.
Mm.
The only thing that I understand is like, why aren't we not going on vacation anymore? Or why are we not doing this anymore? Um, I mean, obviously it was a big hit for them because they're considering, moving us to different schools and stuff like that. Um, and now looking back at it, reading different books or watching different documentaries on Netflix. Netflix is a big part of 2020,
Oh yeah.
part of the quarantine. So I've seen a lot of documentaries about it, and I learned a lot about it. And luckily, when you buy a home, you have to sign a stack of papers that's like this thick.
Uh-huh.
And it's because all those disclosures, making sure that everybody's been treated equal, there's no discrimination, making sure you are able to repay this loan. Um, all these different regulations and laws put into place because of 2008 is there to prevent it from happening again. So um, I mean, that's what I have to say about it.
Do you think The Big Short did a good job of really watering down for people who didn't really understand what happened?
Dude, to be honest, I haven't seen that movie
You
yet.
haven't seen it? Oh my gosh.
It's on
Andre,
my
you
list.
gotta watch it.
Yeah, it's on my list. I've seen other
Okay.
documentaries about the 2008 crisis,
Uh-huh.
but The Big Short, it's on my list. It's
Oh
definitely
my
on my list.
gosh. I think it's brilliant. I kind of wanted to get your opinion. So once you watch it, hit me up. I'd love to hear what you're saying about it. But they covered from people who predicted, who saw the big red flags and bet it against the market. So that was a big controversy. And I think the guy who did that wrote the book. I may not be right, but he wrote the book, and then the book was the source of the movie. But I'm not 100% sure. But it has a fantastic cast, and
Yeah.
I felt for someone who doesn't understand finances or anything about the stock, I think yeah, it was still technical. They had the way of they use storytelling to kind of explain what things, the technical aspect of things, and I thought it was brilliant the way they did it. So I think you would enjoy it very much.
Yeah.
Um, but yeah, so 2008 didn't really affect me. My mom was a nurse, so I didn't really see much. I don't really remember it. I mean, I was fresh in college. I can't remember. It's kind of surprising.
Yeah.
But when I sit down, because I used to be a power planner for a financial planner, and when I would sit down with clients and I would ask them, how was 2008 for you? There's a variation of emotional responses. So it's very
Mhm.
interesting to see 2008 and 2020. It's not the same, right? Because we're talking about an industry that kind of fell down in 2008, but 2020 is something invisible, something that puts you in the hospital and you
Yeah.
can't work for 2 weeks. You may have long-term effects from it. You may die from it. You may spread it without even showing symptoms. I mean, that's kind of crazy. And do you know anyone that's in the medical field? And
My sister, she's actually a nurse. Yeah.
wow, so how's that been for her?
It's been tough. She's just been in like a bubble suit the whole time. She's trying to protect herself. And she's living with my parents currently,
Okay.
and my grandparents are living there too.
So wow, so
So
they got to be extra careful then.
yeah, definitely. She's always taking precautions. She's taking exam or tests, the COVID tests at work,
Okay.
to make sure that she doesn't have it, and then spreading it to my other family members. So
Dang.
she's always sanitizing and always on us about sanitizing as well.
Yeah, people talk a lot about masks, but they don't talk about washing hands. I think that's
Yeah,
just as important, especially because it's a protein, I believe. So if you wash your hands, the soap breaks it down. So
yeah.
I think that's what my mom said. Um, but hey, mom, if you're watching this, please correct me. Is your sister directly helping COVID patients?
No, she works in another department in the hospital, but I mean, there's always patients coming in and out of that hospital.
Right.
So
Okay. Well, we covered a lot. Is there anything else that you want to mention for anyone watching before I go into my last section?
I mean, no, I think we pretty much covered it all. I just wanted to go over the home buying experiences. Um, it's very competitive, and you would think that people don't want to buy right now during this pandemic, but actually a lot of people are selling their houses because, well, either I come to my personal experiences, there's two different types of sellers. People that want to cash in on their equity because they need the money because they lost their job or
Oh,
whatever.
wow. I
Or
didn't
there's
think about
people
that.
that now, yeah, there's people that now want to sell that equity now and then buy another house because they want
Lower
to
rate.
upgrade
They can lock
or
in a
stuff.
lower
Like that.
rate.
Yeah.
Yeah.
So those are the two main sellers that I've seen. And the people that are buying, it's very, like I said, competitive because the rates are so low. It gives you a little bit more wiggle room to increase your offer, to go up 10, 20. One of my clients went up $30,000 on his offer just to try to get accepted, but it's so competitive that they just went with another person.
Wow.
Yeah,
That
it's
must be
it's
frustrating.
crazy.
So
It
it's
is.
a good time to be a seller right now, and a good time to be a buyer if you could land a pretty much get your offer accepted.
Yeah, definitely. But it's gotten a little difficult for like realtors, inspectors, and appraisals, or people that like come in contact with
The
the
clients.
different parties.
Uh-huh.
Yeah, because they don't want to be in contact with somebody that has COVID. You know, so for example, I have a client that they're buying a house. They are doing an inspection on the house, but the inspector only finished half of it because they found out that the owner had COVID.
Oh my gosh.
So the inspector had to leave. He quarantined himself, got a test, came back negative, and then they made sure they sanitized the whole house and everything. Went back the following week to finish an inspection, and that causes delays in the files.
Absolutely.
So 1 week, 2 weeks delays are, it's not fun.
It's
Definitely
not.
for the people that are buying the house. When you're under contract and you have to close by a certain date, um,
Oh wow, yeah, you're right.
it's difficult.
So if you're a seller, please do not make sure you're all good.
Yeah, yeah, definitely.
All right, Andre. Well, I like to end our segment with the fun fast five. So that's 5 fun questions to answer about under 30 seconds. You ready?
Yes.
All right. Number one, the best $5 you spent in the past 12 months.
This one I would say elote. And
Elote.
elote, yeah, it's a corn, from like the corn man in his little cart. They put the cheese, the butter, the chile and everything. Um, we're in the middle of a pandemic, so you have to enjoy the little things. And that elote for my wife and me is like one of our favorite snacks to have. So I think that's the best $5 I spent in the last year.
That sounds delicious.
Yeah, it is.
All right, number two. If money was not an issue, what is that one unnecessary thing you'd splurge money on?
I was gonna say vacation, but I think that vacations are necessary because your mental health is very important.
You're
So
right.
I think you should take vacations every now and then. But unnecessary things, I'm probably gonna say technology because I like technology. I'm a big nerd. I like having little gadgets, so I'd probably just splurge on iPads or tablets or whatever.
Nice. Nice.
Yeah.
Number three, the best money mistake you've made. So I know we make mistakes when it comes to money, but sometimes making those mistakes, we learn such an important thing in life. What would be that best money mistake for you?
I would probably say the way I filed my taxes.
Oh,
Yeah, because there was a point in my life where I was getting paid 1099 because I was self-employed
uh-huh.
and I didn't make any payments to the towards those taxes throughout the year until the end. And I saw the invoice that I had to pay to Uncle Sam, and I was like, no, no way, never again. So luckily I made the adjustments, and now it's working out better.
I did the same mistake, but I've done worse than that, so that's good. But yeah, making your quarterly if you're 1099 is it saves you a lot of money.
Oh
It's
yeah,
a lot of math. It's kind of bothersome, but at the end of the year, you'll be way happier.
right.
Number four, name the thing, place, service that made you go, this is the last time I'm buying this.
So I bought a Kia that was certified pre-owned, and I'm never doing that again. Not so much it was a Kia, but because it was certified pre-owned. So long story short, there's a lot of problems with the car. The dealership wasn't taking care of it. They wanted me to pay an extremely high amount of money to fix it. So I just ended up having to trade it in. I got a Honda Civic, rolled over the negative equity, and I'm never buying certified pre-owned again. Either leasing the car or brand new. That's just how it is now.
Cool. Um, and then the last one, best money tip you got when you were in your early 20s.
The best money tip I would say is to, discipline yourself in creating an emergency or a savings fund. Because you can, like we mentioned before, you can always prepare for the future, but you never know what's going to happen. You never know. We didn't know that COVID was going to hit. So having that savings fund or emergency fund was really awesome to have. So discipline yourself, get a savings fund.
I agree. I'm all about that. Well, hey, Andre, thank you so much for coming on. And good luck to you. 2021 is going to be
Yeah.
better, right?
Yeah, it's everybody's year, hopefully.
And good luck on your test in January.
Thank you, man. Thank you. I appreciate it. Thanks
All
for
right.
having me.
Yeah, thank you, and I'll see you next time.
All right, man. Take care.
Take care.